Hello, this is Chris Hadley with Fairway Independent Mortgage. This is our next video in our 4C's series of mortgage lending, and this one is about capital. Capital is simply the money that you're going to need to purchase your home. When you buy a home, you will need two different buckets of money. One, your down payment bucket, and two, your closing cost bucket. Today we'll be talking about how much is needed for each of these buckets, what affects these costs, where the capital can come from, and also where it can't come from. And lastly, we'll talk about the documentation that you'll need. Let's start with how much is needed for the down payment. This can be anywhere from 0% and anywhere upwards of even 50% or more of the home selling price. That depends on what type of loan you're doing and certainly your wants and your needs. If you're using USDA financing or you're a military veteran, your down payment can be as little as 0%. FHA is going to require you to put 3.5% down, and a conventional loan will require as little as 3% down. Now, the closing costs range anywhere from 5 to 7%, depending on quite a few variables, but rarely going above that 7%. And say you're buying a home for $200,000, you could expect to pay closing costs anywhere from $10,000 to $14,000. Let's now talk about what affects these costs and how they can range. First, your location is important, and that's because taxes are different from county to county, as are property prices and values. So depending on where you're looking, you may pay a different price because of taxes and really the price of the home. Next, the type of house you're looking for also matters. Like if you're looking for a townhouse or a condo, you may have to pay a homeowners association fee or even an initiation fee to get into that community. The type of loan you're doing also matters. The different types of loans are FHA, USDA, PHFA, VA, and of course the conventional. And each of them have different costs associated with them. These are just some of the things that can shape the cost of buying a home. There are many ways for you to get the capital needed to cover the cost of buying a home, and that it can come from your earned income, just money you've saved over time. And for that, you want to check out my video on capacity. That explains the various types of income and how they affect the home buying process. It can also come from a gift, but it does have to come from a family member. Believe it or not, there is absolutely no maximum or no limit on how much you can be gifted for the money to buy a home. So if you have a rich uncle, you may want to just stay on his good side so he can give you some money someday. You can come from an inheritance, it can come from business savings, even the sale of stocks or bonds. You can liquidate or borrow from your 401k. And sometimes you can get money from a government grant or a government agency. And you can also get it from maybe a community second, and that can come from PHFA or even a local government. On the flip side, there are a few areas where money can't come from. It should go without saying, but please don't go rob a bank and use that money to buy a home. That's certainly bad. And you know what else is bad? Unfortunately, cash. Cash in the mortgage world is a naughty four-letter word, and it can't be used, and that's because it can't be sourced. You also can't put money on a credit card and use that to buy a home or an unsecured loan. However, it can come from a secured loan, like a home equity loan on another property you own, or maybe even on a car that you own free and clear. You can borrow money against that. As long as it's against an asset, we can use it. Now that we've talked about where the money can and can't come from, let's look at the necessary documentation. Like many things involving the home buying process, the documentation varies from person to person and loan to loan. That being said, we generally look at 2 months worth of bank statements. We also scrutinize large deposits outside of your payroll deposits that are more than 50% of your monthly gross income. In order to get more details on this type of stuff, you can call my office and we'll gladly walk you through that and discuss that in detail. And believe me, in this case, it's much easier to ask for permission or get guidance on the front side than to try and fix it or ask for forgiveness later. Thank you once again for tuning in, and I hope to see you next week when we discuss the final C in the home buying process, which is collateral.